Hey everybody, it's Adam Tracy, and continuing on my series of TradFI 101, wanted to talk about the clearing and settlement of commodities. I already talked about securities, and commodities are their own beast, so to speak. And what you have is kind of a fragmented market, right? So when it comes to financial futures or derivatives, you have a T+1 settlement. Physical commodities, typically T+2, they could be more. OTC or physical delivery is like negotiated by trade. And so it's kind of all over the board. But it's similar to securities in the sense that you have the central counterparty. Like in the US, CME is the major counterparty, which stands as the middleman between buyer and seller through a process called novation that I talked about earlier. And there's a lot of leverage involved, right? And you, the trader, are effectively giving that leverage to your broker, who in turn gives that to the counterparty. And the reason being, right, because one, you have initial leverage, which is like covering the entire position should the trade fail, right? Because there's delivery involved in futures. And then you have something called variable margin, which provides a daily mark to market because of the settlement period, right? So, and your account can be credited, debit, whatever the case may be, because the settlement isn't instantaneous, right? Which is sort of the problem. So this margin kind of protects the parties, because even though you've made the trade and like seemingly locked in the price, the futures contract is still trading, right? And the settlement hasn't necessarily occurred. So you have this like kind of bifurcated process, and the manual through the central counterparty, their goal, right, is to minimize, one, to like execute the trades, but two, just like the DTCC, what they want to do is minimize the exchange of funds, right, the actual transfer of money. So what they do is they basically aggregate, right, trades of the same nature and then settle those at one time. So there's like just the most minimal amount of payments in USD that are necessary to occur, right? So hence why you have like longer settlement times. So conceptually, it works the same way as the securities industry in terms of clearing and settlement. And you have some different times because of the nature of, settlement times, because of the nature of futures contracts and OTC contracts. But the other thing too is like, okay, why are we doing this, right? And like, what can elements of TradFi bring to the table that would change this? And that is for itself its own video. But as I touched upon in my video, my initial one regarding securities settlement, right? The issue is really like timing, okay? And reconciliation, right? So the deficiencies are just that. And the deficiencies lie in the margin requirements. And like if you've traded futures, like especially physical ones, like there's a lot of margin involved. It's that the fact that you have exposure to market movement, right? Even though you through your broker have executed the trade and completed the trade. So it's that's the problem, right? Like that is like the inefficiency that we've lived with for forever, basically, right? Like granted, settlement times have come down, but it's not that. So when you look at like blockchain, right? And again, this begs for its own video, which is, down the road coming up next. You're looking at real-time settlements, right? Real-time transparency is like, as a trader, you'll never interact with the CME, the central counterparty, right? Who you're actually giving margin to. You'll see that in real time. You'll have transparency in terms of what's going. And through smart contract, you don't need the central counterparty, right, to basically wait and try to aggregate all these trades to limit the number of financial transactions in USD that go back and forth, right? So, but again, that's its own kind of thing, which we can get to at a later date. But in a nutshell, commodities, derivatives settle similar to securities with some variation in terms of the settlement day and the timing, but my key point and the key takeaway here is that it's as inefficient in the securities world as it is in the commodities world. And there's some blockchain-based solutions, which will be the next topic. So that is futures and derivatives settlement today, and how we can kind of shift forward, and different solutions that, if you are in TradFi, how you can potentially integrate those solutions that you may be creating into that settlement. So if you have questions, Tracy.io. Talk to you next time. Cheers.